Hello, everyone. My name is Lucian. Most of you know me from Twitter as Triangle Investor, and today I'm honored to have a resource investing legend in my show. That is Mr. Rick Rule. Rick, welcome to my show, and thank you for coming.
Well, thank you so much for the opportunity to visit with your audience. I appreciate it.
Thank you very much. Rick is opening a bank at the age of 70. How is that venture going? When is the grand opening?
Well, the grand opening will ultimately now be up to the FDIC. As I understand it, the regional regulators have approved us, and for very obvious reasons. For people who follow U.S. banking, the national part of the FDIC seems fairly busy with other challenges. I would hope that we will be able to open this summer or early fall. Certainly with regards to the business aspects of the banking, the technology, the hires, the deposit products, the lending products, all of that is open, ready to go. We're just waiting for permission. As I understand it too, two of the three regulators are on board. So we're just waiting for the top of the FDIC. And given the challenges that they're having elsewhere in the banking industry, I suspect that their tardiness could have been expected.
Great. I wish you luck with that venture. I really do. Rick, I want to start with the questions that I usually ask my guests at the end of my show. And those are the BNB questions. Why BNB? Bullish, neutral, or bearish? I have a list of 10 commodities, and I will count them, and you will say, are you bullish, bearish on them, and in the next 12 months horizon.
Fine.
On them. So after that, we can go from there. Are you ready?
Sir, ready.
Okay, the first, my favorite, uranium.
No brainer, bullish.
Oil.
Neutral to bullish.
Okay, gold.
Bullish.
Okay, do not, it's a 12 months horizon.
Yep.
Silver.
Neutral to bullish.
Okay, copper.
That's a tough one. Neutral in 12 months, very
12
bullish in 5 years.
Agreed. How about lithium?
Neutral to bearish.
Okay. Platinum?
Neutral.
Tech stocks?
I'm not smart enough and I don't have enough expertise to comment.
Okay. How about US dollar?
If you denominate it in other currencies, bullish. If you denominate it in gold, bearish.
Okay, fair enough. And the final one, US real estate market.
Neutral to bearish.
Okay, very interesting. Rick, let's discuss the topic that always puts the smile on your face, as I notice, and that is uranium. My first question is, what catalyst will do the next heavy lifting for uranium equities? And I know your take on that was the Japanese restarts, which we see, and the bonus we saw is that Japan allows nuclear plants to operate beyond 60 years. So what catalyst is the crucial one?
That's it. The turnaround of the Japanese nuclear fleet does several things. It increases baseline demand for uranium as supplies are being tight. But it also takes existing Japanese inventories off the market. When the Japanese plants weren't open, Japanese inventories, which were the largest in the world relative to Japanese consumption, moved from inventory held for fuel to inventory held for sale. That is to say that they represent market overhang. That market overhang going away, while the Japanese nuclear fleet begins the refueling cycle and the repurchasing cycle, is the most bullish near-term factor around the uranium market. Everything else has been pretty much in place. Your listeners should note that global uranium demand already exceeds the demand that occurred pre-Fukushima. New plant construction has taken care of that. The remaining arrow in the quiver was very much the pace of Japanese restarts. And we're just now beginning to see the pace of Japanese restarts appear in the market. We're seeing it two places: the increase in the spot prices, which I think you've noted.
Yeah.
But much more importantly, the fact that about 75% of the transactions in the uranium space don't occur in the spot market anymore. They occur in the term market. And the term market settlement prices are markedly higher than spot. So it's important to see the whole firming of the tone in the uranium market around the pace of Japanese restarts.
Okay, how would you describe the current price of uranium equities? And we can divide that on producers, developers, and juniors or explorers. I mean, would you say from the speculators' corner that they are now at favorable entry point after few pullbacks we witnessed in the last month, or no?
Well, certainly for people who haven't yet invested in uranium, if they have a speculative bone in their body, they need to enter the market. From my own viewpoint, I'm fairly well represented in uranium, both in terms of the physical product through the Sprott Physical Uranium Trust, but also through a range of producers from the very highest quality to somewhat gamier. I would argue that many of the listeners to Triangle Investor, many of the newer investors who haven't been in the market as long as I, need to continue to invest in their own education before they allocate capital to the sector. For those who have done the work, I think there are opportunities throughout the sector. I would note that our most recent public company database has 76 publicly listed companies who purport to be in the uranium business. And we believe that 11 or 12 of them are buyable at current prices. It doesn't mean that there aren't more. It means that we don't know enough about them to determine whether for our own portfolio we should buy them.
Actually, I counted 123 uranium and nuclear related companies, and I did it, and I posted on my website. There is a list of all publicly listed uranium and nuclear energy related companies. That brings us to my next question: is how do you separate wannabes from the real thing?
We want a uranium company to have some uranium, not merely be looking for it. And we either want an exploration project that has a lot of pierce points into uranium so that we can see their ability to delineate a tier 1 asset, which is to say more than $5 billion in recoverable in situ reserves or resources, or in more mature companies, we want to see a developable reserve. We segregate in our portfolio between existing producers and developers. Existing producers, which have a higher weighting for us, we want them to be solidly economic, generating free cash after the cost of capital at $60 per pound. For the developers, we recognize the statistic that the median incentive price for greenfield project construction is $75 US. So for those development stage properties that we're buying for optionality, we assign them viability at $75. But we notice the delta in pricing parameters between 60 and 75. So we place higher certainty valuations on the companies that we value at 60. And we also run a $75 case on those same companies to determine whether or not we get more optionality for free in the higher quality companies than we do in the lower quality companies.
And where do you see spot price for in the next 6 months?
I don't know, because what you're seeing is that less and less transactions are taking place on the spot market.
Yeah.
The spot market was very, very, very important 3 years ago, when 80% of the transactions in the market were taking place at spot. 75% of the new transactions taking place in the market are taking place in the term market. And the term market's very opaque. So we're back to the circumstances that were in 15 years ago, where we didn't actually know what the market was. The spot market is something that many speculators and investors rely on for comfort, because it's a statistic that you can obtain easily. Unfortunately, the statistic is increasingly meaningless because there's so little price visibility in the market.
Some CEOs are telling to the public that that the utilities have started to panic. Would you describe that as a panic, or maybe a little lighter term would you use for that?
I wouldn't describe it as panic, but the nuclear power industry understands three fundamentals. The first is that my former employer, Sprott, through the Sprott Physical Uranium Trust, took 60 million pounds of inventory and put it in uranium heaven. That tightened up supplies, and the utility executives understood that. The second is that the foregone cost, even at today's interest rates, are low in historical terms. The cost of debt capital around uranium inventories, which is easy to finance, is pretty low in historic terms. The third is that we are beginning a refueling cycle, a recontracting cycle around the world. And utilities that have the financial flexibility to front run that are obviously very well advised to do so. And I think that's what you're seeing. I don't think that you're seeing speculative activity on the part of utilities. I think that you're seeing prudent activity on the part of utilities. They recognize that they'll have a need 18 to 24 months out, and they believe that even at today's cost of capital, it's economic for them to anticipate the need with inventory.
Do you see Zuri Invest pushing the price higher?
Not so far, although I think that's something. I think that's something to look at the future. The other thing that I think that your investors and your listeners need to understand is that increasingly, the people who finance on the debt side new build nuclear power plants are increasingly requiring the new build plant to contract for sufficient fuel going forward to amortize the loan. So somebody's building a $10 billion plant, and the banks are providing $7 billion of the $10 billion, and the loan has to amortize over 20 years. Let's say that plant requires $1 million a year. The banks frequently are requiring the utility to acquire 60 or 70% of the fuel necessary to amortize the loan over the term of the loan. And that's causing, it's beginning to cause, just beginning in the last 6 months, to cause another form of tightness in the market.
Yeah, I agree on that, and that is one of my next questions, but we will get to that. I would like to ask you about the pros and cons of certain uranium companies, and if you want, you can expand on the analysis of each one as much as you can or want. So my first question is your thoughts on Denison Mines.
I'm a Denison shareholder, so let's get that out of the way first. There's a conflict of interest there.
Okay.
I own Denison because they are the third largest interest holder in what is, I believe, the Persian Gulf of the uranium business, which is to say, the Athabasca Basin. I also own them because I'm very familiar with the management team. And I own them because they have 2 high-grade discoveries. They have an interesting technology, in situ leaching. I say interesting because I don't believe it's been proven yet. But importantly, they have permitted mill capacity. And it is going to be very difficult to build. There will be new mills built in the Athabasca Basin, but they have permitted surplus capacity, which is a one-of-a-kind asset.
Yes, I agree on that. McClain Mill is one of a kind. What about Global Atomic?
I am a Global Atomic shareholder, although I've been leery about recommending it to other people, in the sense that it was a development stage asset in Niger, which until recently had a very active Islamic insurgency. And the instability of the government of Niger was such that I didn't see really enough precedent in terms of the rule of law, and I didn't see enough stability in terms of the state. In both circumstances, I think that Niger is improving rapidly. It's worthy of a note that despite my nervousness, Niger has been an important uranium producer for a very long time. With no incidents. It might have been an excessive caution on my part. I tend to own things in my own account that I don't talk about publicly, because by now I'm more covetous of my reputation than my wealth.
Okay. Rick, how about enCore Energy?
I don't know enough to comment. I would only say that I'm usually interested in deposits that I believe run to 100 million pounds or more in situ. And I look for deposits that, in addition to being large, would exist in the lowest cost quartile and in the highest return on capital employed. The last time I looked at enCore as a simple function of size, it didn't meet my criterion.
The one that you're familiar with, Uranium Energy Corp, UEC.
UEC is not cheap. Let's get that out of the way first of all. But UEC has done a few enviable things. The United States has come to recognize in the very badly misnamed Inflation Reduction Act that nuclear fuel will be an important part of America's low carbon energy future. And if you deal with that, you have to deal with uranium energy. You just have to deal with it. They will be an important producer both in Texas and Wyoming. Again, with existing permitted infrastructure. They've moved north into the Athabasca Basin buying at a very attractive price reserves and resources up there. I would note too that they have an intangible asset that most investors ignore. The company has spent tens of millions of dollars over 25 years building an investor base, to the extent that there's 90,000 shareholders at Uranium Energy. Those shareholders, there's no constituency in the world that is as eager to hear good news about Uranium Energy than its existing shareholders. And the stock becomes unusually responsive to positive news in the uranium business. That's not an investment criterion. It goes more to speculation and cost of capital. But the fact that they've spent that money and that constituency exists is something that traders need to take into consideration.
Yeah. Another U.S. near-term producer, Anfield Energy.
Again, because of size, scope, and scale, I'm not an Enfield shareholder. I understand its virtues. I'm familiar with and fond of the management team, but it's not in my portfolio simply as a consequence of scale.
Okay, what about Goviex Uranium?
Goviex is something that I avoided until recently, really because of grade and also my nervousness around Niger. The preliminary economic assessment and the resource update removed those considerations, so I'm now a Goviex shareholder. I would note too that behind Goviex ultimately is Robert Friedland, who is a personal friend and I regard as the single most successful exploration speculator on the planet. An important intangible benefit.
Another one next door in Namibia, Bannerman Energy.
Bannerman, I do not own. I'm sort of attracted to the deposit because of optionality, but I am nervous about the grade. I love Namibia as a destination. I really, really, really like Namibia as a destination. I've I've done business in Namibia and become familiar with the political class in Namibia for 20 years, and I'm much more comfortable with Namibia than I would be many locales in the world.
What about your friend John Borshoff from Deep Yellow?
John Borshoff is an amazing human being who made me literally tens of millions of dollars, and by the way, was useful to my reputation. John Borshoff is a force of nature. I note on the downside, he's older than I, which means he's older than some of the rock packages he's exploring. He has a very large deposit, which he put together very cheaply. I am concerned about grade. I am attracted to the fact that John has begun the process of industry consolidation, which the industry needs. And I would further note that despite my misgivings over grade, that I'm a large Deep Yellow shareholder.
Final one, what about Paladin Energy?
Paladin, I'm shareholder of, again, I was afraid of Paladin because of the debt. They raised enough money at higher prices that they were able to eliminate the debt, and then the price fell, which gave me an entry point. So I am a Paladin shareholder. I'm a Paladin shareholder because of their database. I'm a shareholder because of the brownfield nature, the hot shutdown nature of their deposits, and this is a vastly improved balance sheet.
Yeah. Rick, we talk companies. Now let's talk about the people. Can you share, according to your prior experience with the CEOs of uranium companies, who are the people that left a great impression on you and you would always invest in their companies?
Well, certainly John Borshoff is, he's just a great personality. John Borshoff is the kind of guy who would chew through concrete to get what he wanted done. When I first met John Borshoff, he ran a uranium company after a 20-year uranium bear market. When he was released from his prior job, he took as his severance payment their database. That's forethought. When I first met John, I said, why on earth, although I'm interested in uranium, would I care about a $2 million uranium company? How are you going to explore with $2 million? And he gave me a brilliant answer. He said, I'm going to explore my database, which I already own. There's $1 billion in exploration expenditure in that database, and it's mine. It's free. I don't have to find it. I just have to stake what the West Germans already found. Yeah. This is brilliant. Now, I'm not trying to say he didn't get too aggressive in the last bull market. I'm not trying to say that John didn't drink the Kool-Aid. What I'm trying to say is that this is a determined individual. You may know, having a natural resources investment symposium in Boca Raton, Florida. John Borshoff will be a guest there. I asked him in the pre-conference interview, who at Deep Yellow, my clients, my listeners should visit if they wanted more information about Deep Yellow. And he said, they should visit John Borshoff. They should visit me, the CEO. I'm available 24/7. This is a determined human being.
Yeah, unbelievable. Rick, what about David Cates from Denison?
I have a high regard for David Cates. I didn't invest in Denison because of David Cates. Unlike Deep Yellow, I invested in Denison because of the explicit backing, frankly, of the Lundin family. I liked David Cates plus adult supervision provided by the Lundins, and that continues to be the case.
How about Amir Adnani?
Amir Adnani is a truly unique human being. I've known Amir Adnani since he was a very, very, very young man in his early 20s. He didn't know that he couldn't approach Rick Rule and sell him, so he did approach Rick Rule, and he sold him as a 21-year-old or a 22-year-old. The only concern I have about Amir Adnani is that Amir Adnani has too many companies now. And I don't know, as a UEC shareholder on Monday, Tuesday, Wednesday, Thursday, or Friday, if he's working for me or somebody else in some other company. You mean
gold?
Yeah, he attempts to dispel that by hiring very good CEOs, and I hope providing the same level of adult supervision that the Lundins do over their dozen companies.
One other uranium veteran that has uranium in the blood in his blood, Stephen Roman.
Oh, I think that's right. I've known, well, I knew his father. I've known the Roman family for a very, very, very long time. Stephen, I would also say, is on occasion distracted by other ventures. You don't always know whether Stephen is working for you, in his company or not. But certainly, this is a guy who was brought up in a family that was one of the first families of uranium. So often you talk to executives that come into an area because it's easy to raise money. Steve Roman was inculcated with the uranium business around the kitchen table while he was still in high school. You can't duplicate that.
Yeah. He told me in last interview that he went to a mine when he was a 5-year-old.
I'm certain that's true. His father was a real legend and a true freak, totally immersed in mining, including uranium mining.
Yeah. What about Daniel Major from Goviex?
I'm very impressed with him. I hadn't known him prior to his affiliation with Goviex. I've come to share numerous stages with him over 15 years, and I've been able to share a couple meals with him and pick his exploration brain, which is extensive. So while I don't know him as well as some of the other people that you've asked me about, the experience that I've had has all been, very positive.
And Mr. Munro, Brandon.
I think he's a future superstar. I think as somebody who can explain the topic, he's probably the best of the lot, with the possible exception of Amir Adnani. My only criticism of what they're doing there is the size of the prize.
Okay. Rick, what are your top 3 metric to evaluate a good company, and what are your top 3 red flags that keeps you away from them?
Are you referring to uranium now?
You're sorry, uranium, yes.
To uranium. I'm well, I have 3 metrics that are 1, if I might, in valuation.
Okay.
One is, of course, the size of the prize. I'm looking at 100 million pounds recoverable or above. I also want that 100 million pounds to be in the lowest cost quartile worldwide. I want them to win the last man standing contest in a downturn. And finally, after CapEx is considered, I want them to be in the top quartile worldwide in terms of return on capital employed. In other words, if you bring down the AISC by overspending on the front end, you still aren't a good investment. So valuation is important to me. Size of the prize, return on capital employed, and all-in sustaining costs is something that I consider to be very, very important. Although I normally don't consider it as much in uranium because it's strategic, jurisdiction is important to me. All things created equal, I'd be investing in Russian uranium production and processing, but all things aren't equal anymore.
Yeah.
So that's a problem. And I want a human team. This is very important. I want a human team with expertise specifically related to the task at hand. If somebody's definition of success is that they have operated a mine for Cameco in Canada's Athabasca Basin, but what they propose to do is look for, rather than produce, uranium in Niger, I don't consider their experience to be relevant. I want their experience to be appropriate to the task at hand. I'll give you a footnote on that. My second voyage into uranium in 1998, after a 20-year bear market, there were probably 12 teams in the world that were capable of running a uranium exploration development company. There were only 5 juniors in the world, which meant that the probability of your company having a successful team was dividing 12, the number of teams, by 5, the number of companies. pretty good ratio. By the end of the bull market, there were 500 companies allegedly in the uranium business, and there was still the same 12 teams. So there, the probability of having a good team was a function of dividing the number of good teams, 12, by the number of aspirants, 500. And those probabilities were very, very, very unfavorable, as many speculators learned.
We are seeing recently that exploration companies, and not just them, even the developers and producers, have more difficulties in raising money. We already touched on that. They have difficulties in closing their private placements, etc. Do you see that as well? I mean, I want to hear your opinion on that from both of your angles, as a creditor and as an investor. How will this unfold?
Unfortunately for me, as a check writer, none of the companies that I would like to invest in have any difficulty raising money. Particularly when you consider the conditions that existed in my first uranium bull market in 1999, when the only check writer in the world was me. The circumstance that we have now is there's a lot of companies out there that don't have any uranium, but they're looking for it. If the price of something you don't have goes up, it shouldn't affect your valuation. And secondly, the people who are looking for uranium aren't people that have any experience finding it. I would argue that many of the companies that can't raise money don't deserve to raise money. And while that's hard for them and hard for their shareholders, I think it's good for the market. I am not finding a circumstance where if Denison needed to go to market, particularly given that they have 20% of the offering as a lead order from the Lundins, I'm not seeing them have trouble raising market. I'm not raising money. I'm not seeing John Borshoff have trouble raising money. I'm not even seeing Goviex, a more exploration development stage company in Niger, having problems raising money. I am seeing the much smaller companies where their investment attributes are to be charitable, less visible, having problems raising money.
Rick, where are the interest rates going next, and where is the all U.S. economy going?
I'm impressed and surprised by the relative strength of the U.S. economy against higher interest rates. I would have expected an over-indebted society like our own to be much more seriously impacted by higher interest rates. I hope that this strength isn't temporary, although I suspect it may be. It would appear to me that the Fed has gotten a bit of religion with regards to inflation, and the Fed has said themselves that they aren't looking for relief from inflation from the federal government, which seems to me that we're going to have at least one, maybe two more 25 basis point rate increases, which I think, at least in the near term, the U.S. economy can handle. My preference would be that the Fed got out of the way and let the market set interest rates. But nobody much cares about my opinion in that regard.
Okay, let's touch more on gold. Are the gold equities getting your attention at the moment?
Yeah, I'm a buyer of the gold equities. I'm a buyer of physical gold and the gold equities. If you measure the gold equities by the relationship between enterprise value versus net present value, using the forward strip as a pricing mechanism, the gold stocks are likely the cheapest that they've been in my career. I don't like to use metrics like price earnings or price cash flow because those neglect the fact that it's a depleting asset. So I like to use net present value rather than price earnings or cash flow. It's a more conservative metric. And by that metric, the gold stocks are the cheapest that they've been in my career. It's worth noting that there are very, very, very broad fluctuations in enterprise value to net present value, which is to say some companies are decidedly more undervalued than others. I would note, too, that most people's view of the gold equities universe extends well down below the producers, as does my own. There too, I would suggest to you that there are wide valuation discrepancies, with probably 80% of the junior issuers in the world exhibiting no value whatsoever. If you throw those out of the equation, the remaining 10 or 20% of gold juniors are either fairly priced or cheap. But I note for your listeners that you have to be extremely selective in the gold space.
And which jurisdictions do you prefer when it comes to gold equities?
I'm almost completely agnostic in that business. I understand political risk. I would note for your listeners that my worst personal experience of loss with political risk was in the People's Republic of California. So jurisdictions that seem safe often aren't. I wouldn't want, as an example, to make a gold discovery in your home jurisdiction, Switzerland, because I fear I would never get an operating permit. The Swiss are too rich to need mining. But I have to say, I would rather take political risk than technical risk. What I want in a gold deposit is very similar to what I want in a uranium deposit. I want ultimately a tier 1 or a strong tier 2 deposit. I want to be in the lowest all-in costs, and I want to be in the best quartile in return on capital employed. Specifically, I want an indicated IRR that exceeds 25%, and I want to have some confidence in that. I have made money in the gold business in Cambodia. I've made money in Congo. I've made money in Mali. I've made money in many hard places. I would much rather take political risk than technical risk in gold mining.
You said you are buying physical gold. Do you prefer bars or coins?
I personally prefer bars. I have sufficient liquidity in junk silver that the traditional reason why somebody might buy coins, I've already covered. I don't like to pay premiums. And the consequence of that is that my gold purchases take place either in bars or, in my own case, in the Sprott Physical Gold Trust, New York Stock Exchange deposit receipt program, a trust program. Obviously, because I'm the largest shareholder of Sprott and a former employer, I trust them.
You touched on Sprott. Are you in contact with Eric?
Passing contact with Eric. He, like me, pretends to be retired. He is anything but he's an absolutely delightful human being, and one who is at once a pleasure to be around, but also one that you can continue to learn from. So whenever I have the opportunity to spend time in his company, I do it.
Okay, let's touch on silver. Same questions. Are the silver equities cheap enough to have your attention?
Well, there hardly are any silver equities. I wish there was a larger universe of them. In answer to your direct question, yes, of course. The silver business has been very good to me over decades, particularly because I remembered to sell, unlike my friend Eric, the true believer.
Yeah, I know. He holds for years.
I would caution that most of the silver that's produced isn't produced out of silver mines. It's produced as a byproduct of lead, zinc mines, copper mines, gold mines. So finding an attractive pure play silver producer is very difficult. I would note too, and I don't encourage your listener to take advantage of this, but in a true silver bull market, in movie parlance, the good, the bad, and the ugly all go up. There aren't enough silver equities, and there's not enough market capitalization in the silver space, so that when the general investor gets attracted to the silver narrative, the silo can't hold the money. And there is truly explosive upside. That's no excuse for being dumb. But if you are patient and if you can stomach the volatility, the silver equities in a bull market outperform any other natural resource equities class.
So if I get this right, Rick Rule's portfolio, majority of it is uranium, precious metal stocks, and what else?
I mean, the majority of my new investments in the last 5 years have been in conventional energy, oil and gas and coal. I grew up in the oil and gas business, so I'm more comfortable with it than anything else. And when oil fell to the twin shock of COVID and Greta, and they were giving away oil stocks.
Yeah.
I mean, listen, at $20 a barrel, $20 US a barrel, never mind free. At $20 a barrel, the investment equation was this: would the oil price recover from 20 to 60, or would you not be able to start your car? Those were the only two answers, and I figured that my car would start. So I thought, well, the oil price has to triple. And if the oil price has to triple, oil company margins will go up by more than the price increase, and so should the share prices. And triples are good. I continue to be overinvested in oil and gas relative to other asset classes on a historic basis.
Yeah.
For the same reason. So in the natural resource space, the overwhelming proportion of new investments for me in the last few years has been in oil and gas, and less so in coal. I'm also invested in a producing sense across the rest of the industrial materials complex: Rio Tinto, BHP, Glencore. While I note that iron prices could soften, which would in the near term hurt the free cash flows of both BHP and Rio, they still trade at extraordinarily low enterprise value to net present value relationships. They both pay extraordinary dividends easily out of free cash flow. I don't regard that as part of the speculative part of my portfolio. I regard it as the beta part of my portfolio. In effect, there, I'm betting on increasing population worldwide and increasing living standards among the poorest of the poor, an investment thesis that's worked for me for 40 years. I'm an experienced exploration speculator. I have access to very, very good geologists, and I know how to interrogate them very well. So I'm also attracted as a speculator to exploration for virtually any commodity on the face of the earth where I think I have the possibility of a tier 1 deposit. So, exploring for silver, of course, copper, of course, nickel, of course. I'm not adverse to making money from sand and gravel.
Yeah. Good point. Rick, in which sector do you see the most M&A happening this year?
I hope I see the most M&A taking place in the gold space, in the precious metal space. The reason for that is that we have way too many management teams in the space. We have a variety of good assets, but we need to lower the general and administrative expense relative to assets under management and relative to free cash flow.
Yeah.
I believe in the fiber of my soul that we are going to have a precious metals equities bull market. And I would love it if going into that bull market, we had fewer, better, stronger companies. Big companies have more trading liquidity, so they have a lower cost of capital. And in a capital-intensive business, a lower cost of capital is a formidable competitive advantage.
But do you see it among explorers, developers, producers?
I hope we do. The lateral merger that Deep Yellow carried out in the uranium space is indicative of the fact that a smaller management team, if they're competent, can manage more than one advanced exploration activity while lowering the general and administrative expense and benefiting from the increasing liquidity that a larger company provides. So my hope is that you will see more M&A in the exploration space. I don't think you will, because most management teams want to be the surviving manager.
Yeah.
And in a merger, if you lower G&A, there's only one survivor. So I suspect that most managers will act in their own self-interest rather than in the interest of their shareholders. And as a consequence of that, we'll see many fewer mergers than we otherwise would.
Okay. Rick, everybody asks you the same question. What were your biggest gains in which commodities, in which stocks? I'm interested to hear the other side. What was your biggest loss in your investment career?
My biggest loss in my investment career was a Canadian company called Heating Oil Partners, which was a heating oil distributor in the U.S. Northeast.
Okay.
And I experienced that loss because I thought that the management team would act rationally and refinance. And I was actually willing to finance their refinancing. I don't know what their incentives were to take it into bankruptcy. Perhaps they were part of the team that took it private. But my biggest negative experience in the industry was supposing that a management team wouldn't act irrationally.
Okay. I think we can touch on your rule symposium. What is the benefit for an average investor to attend there?
Well, first of all, it stood the test of time. That symposium has existed for 30 years, 22 under my stewardship, 23, pardon me, under my stewardship.
Yeah.
So we're not Johnny-come-latelys. The fact that we've been able to do it for 23 years successfully says something about our culture, putting on conferences. What do we do differently? We begin by getting wonderful gurus, wonderful big picture thinkers, the Jim Rickards of the world, the Bill Bonners of the world, the Spencer Abrahams of the world, the Grant Williams of the world, the Nomi Prinzes of the world, people that have a unique worldview and not the worldview that you would see in the mainstream media. A worldview that's more built around contrarian activities and more built around natural resources and precious metals. If you agree with that worldview, and we have it well articulated, we have analysts and portfolio managers who have passed the test of time, not people who learned to spell gold 5 years ago, but rather people who have been in precious metals and natural resource markets for 30 years through bull market and bear. More importantly, we have a group called the Living Legends. These are entrepreneurs who have built multi-billion-dollar natural resource companies from scratch. It's important to hear their stories. It's important to learn how building a multi-billion-dollar company through a bear market has made them a better investor and what tips they have for you to be a better investor too. In particular, how to identify the character traits in younger people who will become living legends themselves. In addition to that, attendees have told us that exhibitors at our conference are content too. They're not merely advertisers. The consequence of that is that every public company exhibitor at our conference is owned by the conference sponsors. Sadly, there's no guarantee that because I own a stock, it'll go up. But there is a guarantee that if I own it, I have invested sufficient time and treasure to understand it. These are vetted. Finally, the guarantee. For the 23 years, that I've run the conference, anybody who attends that doesn't feel like they got their money back, their money's worth, can get their money back. If for any reason, including the fact that the curriculum might be too sophisticated, in other words, we give you too much value, if you don't think that you got your money's worth, I will refund it. We would prefer it if you told us why you wanted the money back so we could make the conference better, but that's not a requirement. Finally, this year, for the first time in our history, you don't have to come to the conference. We're going to live stream the conference. So your global investors for whom it isn't convenient to spend 4 days can attend virtually. The conference is July 23rd through 27th. I should say, by the way, that whether you attend on person or virtually, you will have access to the entire conference recordings for 6 months. I found myself, even putting on the conference, understanding most of the material, that 50 hours of programming in 4 days is more than I can comprehend. And having the ability to replay the tapes in some of the presentations, which I found particularly valuable, has been useful for me. I've played most of the tapes of last year's conference at least 4 times, having put it on myself and attended it personally.
Great, Rick. That's about it. I want to thank you for being my guest, and I hope we will meet on your conferences and talk more about uranium, silver, gold, and other things. Rick, thank you very much.
I look forward to that. And by the way, any triangle investor who cares what I think about natural resources can find out in a personalized sense by going to ruleinvestmentmedia.com. If you list your natural resource stock there, I will personally rank it 1 to 10 and comment on it if I think that my comments have value. It's ruleinvestmentmedia.com. List your natural resources. Please no tech stocks. Please no pot stocks. Please no crypto. You know, leave an old man to do what he does best. But I look forward to having those conversations.
Rick, thank you very much.
Always a pleasure. Thank you.
Thank you.